sector or sectors are fundamentally perfect for us to invest in starting from today itself.
My learnings with people on how do you identify these sectors. And
So
yes,
right.
here's how you identify these sectors. There are broadly three pillars which you look at.
For in the budget, when Nirmala Sitharaman ma'am is speaking, what are the things that Indian investors should be ready to hear, and what should they focus on?
In general, whether it is this year's budget or the next year's budget or any year's budget, what should an Indian investor look forward for?
What are the top 3 metrics or factors that you recommend everyone should consider before investing in a stock?
The biggest thing which I look into is the management of the company.
Can this attitude of making quick money or overnight success actually work in the stock market, or is it like a recipe for failure?
Would really not peg Gen Z having this urge of gratification, and that's why they are doing it. I believe that has always been there, in my opinion. I would suggest that long-term investing is definitely very helpful. You'll have to be patient. Like, for example, right now the market has kind of fallen to a good amount, to a great percentage, more than 10-15%. So if you have to invest today, you can't be really expecting that your screen will turn green tomorrow itself.
Can you tell us about your entire journey from scoring 60% in the 10th and 12th to becoming a founder and a successful investor today?
But because I'd worked so hard towards that particular moment, and I somehow felt, maybe God, but somehow I felt that there was a force which was kind of supporting me yet challenging me. And this is the conversation I told to that force, maybe God. It's like, तेरे को जितना दीवार खड़ा करने कर ले, ये दिन के लिए मैंने मेहनत किया, मैं एग्जाम तो देके रहूंगा.
Hello everyone, welcome to the 6th episode. In this episode, trust me, there is a little something for everyone. In this next 1 hour, we have covered so many concepts like how money works, the evolution of money, fundamental analysis of stocks, the stock market in general, tips for CA aspirants, and also motivational stories for those who need a kick. Don't worry, I won't be the one who will cover these concepts. For this, I have a very special guest who has over 12 years of experience in the finance field, who is an educator, teaching CA and FRM, and also has his own company called Capstone Learnings. But he has also seen his share of failures, one of them being scoring only 60% in the 10th and 12th standard, but he's always come back from them, better and stronger. We have discussed crucial concepts in this treat of a podcast. So sit back, relax, and enjoy. So, hello everyone, welcome to the 6th episode. Today with us, we have a financial wizard, an educator, a founder, and an investor. So please welcome to the podcast, Mr. Vinit Mehta, sir.
Thank you so much, Arnav. Thank you so much for having this podcast with me.
Of course, sir. Thank you for being here. So with all the fundamental knowledge you possess, when you are doing your fundamental analysis, when you are looking at the company's data, what is that one fundamental metric, for example, let's say PE ratio or PEG ratio, or even sales or profit for that matter, for any stock or any industry, which is a deal breaker? For example, let's say this is a hypothetical scenario. This is for me. For example, let's say the company's PE ratio is, let's say, below 30. So I immediately discard it. कि नहीं भाई 30 के नीचे I'm not going to even look at the metric ahead. तो मैं कुछ दूसरा नहीं देखूंगा. So is there something like this for you as well?
Referring to what your approach is, you are using PE ratio as a parameter to screen the companies, not really to decide whether to invest or not. My style of screening is a little bit different. I actually focus more on the industry per se. I try to understand where the industry is going on an overall basis. And then I try to find out companies which have got an edge in that industry. Maybe they have a higher market share. Maybe if they other than the market share, maybe they have a different strategy in terms of differentiated product, or maybe in terms of how less concentrated, in the sense if there are less players in the industry and there is a differentiated product. So in that case, those are the industries I try to identify. And based on that, I then start looking into the company. But nonetheless, coming to the question which you asked about that one parameter which I would look across all these companies irrespective of the industry, that would be return on equity. And when I look at return on equity, I just don't look at the return on equity of a particular year. I look at the return on equity of its trend over the last few years, and not just of the company but also of the industry, because it gives an idea about where the industry is going in terms of competition, margin pressure, and etc. But nonetheless, coming back to the company, I look at the return on equity of that particular company, not just of the year but of the previous years. But there's something interesting about return on equity, and most of the finance students might be able to relate over here. There's something called as DuPont analysis. You see, DuPont analysis, it decomposes or breaks down the return on equity. For example, think about it. If you just refer my hand movements, let's say you are the investor, you are the one who's putting the money into the equity, right? And then that equity money is used to invest in assets. and then that assets is used to generate revenue, and that revenue translates into profit, and that profit becomes equity holders money, income. So that is return on equity, net profit upon equity. When you break it down, you get a clear understanding on which factor is affecting the return on equity, increase or decrease. Like for example, I could have pumped in my money in the equity, and that equity is invested into asset. Now here's the thing, that asset could be super efficient in generating better revenues. So it is this part of the equation which is generating better returns. So then your question would be, or your inquisitiveness would be, that what is this company doing differently that they're able to generate better returns? You should check the trend of the market share, and not just that. You should also think about it. If it's not just the equity which is used to fund the asset, it is also the debt which is used to fund the asset. So then, in a way, you also figure it out how much is the debt component, and if the debt component is more and equity component is less, which is leading to better revenue, then in that case your returns will be higher. Think about it. Your money is less. You pumped in less money, but your debt amount is higher. So assets are more, revenue is more, and your profits will be more. So that is what I look into when I'm investing into companies. So
Okay, sir.
I hope I answered that.
Yes, definitely. Got it, sir. So, we were talking about deal breakers. So, let's talk about what to look at, what to focus on more, and go, in depth in that. So, let's say, what are the top 3 metrics or factors that you recommend everyone should consider before investing in a stock?
So, some of the factors which are actually not mentioned in the book should be mentioned. The biggest thing which I look into is the management of the company, their track record, especially the CEO, especially the one who's running the ball. So especially the CEO or the COO, these are the people who are actually running the company on day in and day out, and it is important that you understand their pedigree, where they came from. This is not what is there or mentioned in any of the books, but doesn't it make sense? I mean, imagine if you were to lend money, would you be comfortably able to lend your money to a friend versus a stranger? I think for a friend, right? Why? Because you know your friend. So that gives you a little amount of comfort. So whether you are investing your money or whether you're lending the money, why would you not look at the promoter or the person who's running the company? And there's a history to this, by the way. Here is fundamental matrix is on one side. Yes, you have to look into that. But how can you miss out the person? Like think about this Mr. Vijay Mallya, the airlines, Kingfisher Airlines, which he was. His attitude was a little bit of flamboyant. So from that perspective, you get to understand that what is the priority of this person. Or you can take a stark difference between Mukesh Ambani and Anil Ambani. Like Anil Ambani was pretty much into the social media, on and off, was regular into visiting parties and all. And I'm not saying it's bad to visit parties. What I'm trying to tell you is that where are you as an entrepreneur putting your focus into? Are you putting your focus into the product and the betterment of the product and the customer? Or, not really there. So it really does matter. The kind of person who's running the company, and you should look into it. That is point number 1. Point number 2 is, as a retail investor, what some other things you can look into is if the company is coming up with any new products, or if the company is investing a little bit of money into R&D. So the probability of this outcome could be that the companies could come up with products which could be very different in the market, maybe unique in the market, or maybe the company itself is just kind of diversifying into different product base. So that is another factor. And the third factor which you could look into is, especially for the retail investors, is that you see the institutional investors, these entities, they get a lot of opportunity to interact with the management of different companies, and at any point in time they would have more amount of intelligent information which we as a retail investor may not have. So I'm not saying you blindly follow them, but if you find a company, you should also check one more thing: is the quarterly holdings of these institutional investors increasing? So just when you notice that over the last 2 quarters the investment is increasing in these entities of these institutional investors, you could, if the other parameters are fine, you could consider investing in them. Here's the advantage of it. Advantage number 1: these institutional investors, they buy stock or stake in the company in large quantities. So they don't buy in a go. They spread out their purchase over a period of few quarters. So you can spot the initial few quarters and you can get into the bandwagon, kind of ride the tide, I would say. And other than that, once these institutional investors are to a great extent invested, there's a herd which follows them. And because of that momentum effect, the prices could get impacted on a higher side or lower side, depending on which way the ownership is going. So if you kind of identify that, and if you're able to invest a little bit before that, you will be able to ride the tide and make a better returns out of it. So these are some of the things which you look into based on, I mean, these are the broad things, the most important things I would look into when I'm investing in the company.
Okay. Got it, sir. Absolutely awesome. Got it. So we'll come to recommendations later. I'm sure people want to hear about some sector recommendations or something, and we'll come to that definitely. So today is the big day actually for the Indian stock market. We are recording this on the 1st of February, and it's the budget day. So, what are the things an investor should focus on and hear for in the budget? When Nirmala Sitharaman ma'am is speaking, what are the things that Indian investors should be ready to hear, and what should they focus on basically?
So to be honest, by the time this recording gets out, I think if I were to say what to expect, it would be a stale information. I'd rather talk about in general, whether it is this year's budget or the next year's budget or any year's budget, what should an Indian investor look forward for? Now, my response is more dedicated or more in the context of Indian economy, because every economy has a different dynamics. Like, for example, if I have to say, it all starts with we having fiscal deficit. To give you a perspective, what is fiscal deficit? It's as simple as that. The income of the government is less and the expenditure is more. So how would you run your house if your income is less and expenditure is more? You end up borrowing. So this is why fiscal deficit becomes very important. So now when you're borrowing, it is very important that you borrow and spend that money at the right place. Especially, so if you end up spending the money in terms of giving, these are called social transfers or social welfares, where you invest in, let's say, freebies, which is not really, like say free food or, free food or let's say, for example, free food grains, something like that. So if you invest in those freebies, it is not going to generate, or it is helping the people, but it helps them in the moment. But rather than that, if you invest that same money into, let's say, educating people, into, let's say, developing infrastructure, all these things in future will generate returns. It's as simple as that. You are either spending money, a bomb amount of money into your wedding, which you can, no doubt about it, but it's not going to give, the rapport between you and your partner doesn't really change irrespective of the amount of money spent. So whatever the money you spend in the wedding is just like for your own satisfaction. It is not going to give you any returns in future. However, if you save that money and invest somewhere else, it will give you some amount of return. That's exactly the decision the government has to make. And that's what I would look forward for in the budget. How are they going to manage their borrowings in future? How they have done as compared in the last year as well. So you need to understand it's a budget. So they are estimating that these are the expenditure, this is the income, and this is the amount of this is the amount you are going to borrow. That is what they have. And I will also want to look forward for what has happened in the last year. All those data anyways will be out. But what interesting is, how are they going to contain their borrowing? Especially because of the COVID. During the COVID time, it had made a big dent into our fiscal deficit. And we ended up borrowing more. Last fiscal, we have been able to consolidate, reduce it. But now is the time to consolidate even further, so that eventually fiscal deficit turns into a fiscal surplus. That's going to be a long haul. But my point is, when you're borrowing, the question is, where are you investing? So I would look forward for the sectors in which the government is planning to invest, the kind of boost they're giving to different sectors, because all these sectors get affected. Like, if the government is giving a good amount of investment in infrastructure and housing sector, it's not just the housing sector per se which will get benefited. There are also ancillary sectors to it, like cement. There's a great amount of cement which is required to build even, let's say, for example, 40 lakh homes. And we don't have that enough capacity as of now, if I combine all the cement manufacturing companies together. And not just that. So from that perspective, I can also identify that, okay, if housing sector is the focus of the government, I will also come to know that these are the industries which will get impacted because of that, which will help me decide where to invest or not. That is one. And not just when you talk about housing sector, even steel sector and infrastructure. So I would like to understand, and I would like to focus on how much is the allocation of the expenditure done to each of these sectors. And I would want a minimal allocation done for social transfers. That is what I would look at from the investment point of view. But from an individual point of view, yes, I would look at the tax rate. Especially as an investor, I would look at the long-term capital and the short-term capital gains tax rate. So those are something which I would broadly look at. But again, the focus is where the government is putting the money, because that gives me an indication about which direction all the industry is heading. Again, renewable energy. So all these things does make a difference, and this is what you look forward for.
Got it. So we kind of, you explained about sectors, like which sectors would the government, look forward to, and where they're putting their money. That would be good. They would be good sectors for investing. So now coming to the crux of the matter, we can't, unfortunately, we can't give away stock names because YouTube and SEBI have their policies. But instead of recommending stocks, can you tell us which sector is which sector or sectors are fundamentally perfect for us to invest in starting from today itself?
Starting from today itself. Okay, so I could give away the names of these sectors and within 30 seconds, and we'll be done with it. But I would like to take this opportunity and share my learnings with people on how do you identify these sectors. And yes, I will give the names as well eventually.
Yeah,
but
you
the
should.
idea is to learn as well. So how do
Yes.
you identify these sectors? And for that, please allow me to go back a little bit in time. I would like to draw attention to the era from 2005 to 2020. And
Okay.
in fact, you tell me,
Yeah.
uh, what, in your opinion, as on today, are some of the sectors which are booming, which you have seen booming over the last, let's say, 5, 7 years?
Okay. So technology is one.
Yeah.
Then defense is one. Infrastructure.
By technology, do you mean software and IT related sector?
Yes. Yes, I do.
Okay.
Yeah.
Okay.
Then defense,
Uh huh.
infrastructure, even renewable energy, and
Uh huh.
yeah, renewable energy, and yeah, I think that's it for me. These are major four. I think these are the major four, according to me. Now
What about
I may be a
would
bit
you
oblivious.
would you consider e-commerce?
E-commerce.
Yeah.
E-commerce. Okay, yeah, sure. But I have no idea about e-commerce, to be honest. I have been focusing on these four sectors, to be honest,
No,
and not
but
e-commerce.
but the way, let's talk about what you see around you. E-commerce,
Okay.
don't you think is like Amazon, Flipkart? That's e-commerce, right?
Of
So
course.
don't you think the usage of that has increased at an exponential rate?
Definitely it has. Yes.
Payments sector,
Yes. Yes.
semiconductors maybe. Would you
Yes.
consider
Yes.
that?
Yes. Correct.
Cloud
Semiconductors.
services, electric vehicles.
Done. Yes.
Would you agree on all these? Would you
Definitely.
agree that as on today, these sectors are pretty much popular or in focus for most of the investors?
Yes, they are.
But you know what? Back in the day in 2005, these sectors barely contributed. If I have to give you a parameter,
Yeah.
let's say, for example, e-commerce sector, back in the day in 2005,
Yeah.
if I were to take the total market cap of all the industries globally and compare it with the market cap of e-commerce sector in 2005, it was 0.35% of the
Okay.
total market cap.
Yeah.
But as on today, it is close to 5%.
Oh, okay.
Cloud services market cap in 2005 was close to 0.2%. Again, I'm comparing the market cap of cloud services organization versus
Yeah.
all the industries because we are
Correct.
identifying industries, right? So yeah,
Yes.
today it is close to 1.5 to 2%. See,
Okay.
my point is, I can tell you all these sectors, and
Yeah.
I can say that, you know what, in hindsight, they have given amazing returns. And by the way, not just their not just their market cap which has grown, even their revenue growth was way higher than the other industries and than the GDPs of the countries. So
Correct.
these sectors at that point in time were the future sectors,
Yeah.
2005 onwards. But then the question is, how do you really identify? So
Correct.
here's how you identify these sectors. There are broadly three pillars which you look at. If you look at all these sectors which I'm naming, semiconductor, software, e-commerce,
Yeah.
payments, all these things happened because of three things. There was either a technological change
Yeah.
or there was a business model step change. When I say business model step change, mean the sense the way you conduct the business, if there is any alteration in the way you manufacture or deliver the products or services.
Correct.
Once that is happening, now again, what I'm saying is this usually happens in the order. So when there is a
Okay.
technological change or a business model change, then there is a huge amount of desire of making an investment to scale the business.
Okay.
So there is an increased investment spending, and thereafter, what you would also look at that once that is done, you
Yeah.
try to either grow the total addressable market or either you kind of replace the existing market with the new product. Let me give you some example.
Of course.
Let's say for with the like in 1995, the
Yeah.
internet penetration in USA was close to 8%, but
Okay.
in 2005 it grew over more than 50%.
Okay.
And years and with the changing technology, and now during this period, Amazon, giving Amazon because that is more relatable.
Okay.
Amazon during this period, they liaised with all the suppliers and the vendors and the merchants across the country, and they too brought them on board. I'm not saying that they anticipated this, but they definitely had an understanding. In fact, if you look at these older interviews of Jeff
Jeff
Bezos,
Bezos. Yes.
he had an understanding or a sense that the internet penetration will only grow in the USA, and he was able to see it so far in future that he started onboarding all these merchants and the vendors onto the platform. And when internet penetration went enough, the services of Amazon, eBay, they started picking up a lot. So it
Yes.
was a technological change because of which, and there was this requirement of, there was this alteration in the way you deliver the products. If the traditional method is you go into the shop and you buy stuff, you have to walk
Yes.
down, you have to get it from your couch, etc., etc., etc. What he did was he changed the way the goods are delivered and serviced. That's it. So what he did was he replaced the existing market, and he converted the existing market of consumers into the e-commerce market. And in the meanwhile, while the technology definitely helped him do that, he started investing more and more. And not just Amazon, even eBay. My point is, all these giants in the e-commerce industry which you see today, that's what they were doing back in the day. And thereafter, they were able to, get the existing market of total addressable market. If I have to give some more example, so that is one thing. So yes, the technological change is the starting point. Thereafter, the businesses, they start investing and trying to grow that technology or scale up the business so that A, profit margins improve, B, the quality of the product also improves. So how do you identify these? The technological change is kind of a little bit easier for us to identify these days. But like, for example, the development of artificial intelligence. And in fact, there is a further development to that. In fact, recently, I don't know if you're aware, OpenAI claimed that it is nearly impossible to develop a chat GPT or an artificial intelligence language model without a huge amount of investment. And guess what? There's this Chinese startup, DeepSeek. They came up with a similar model at a fraction of the cost. So all these things are the changes which kind of make a wave, and you realize that, okay, here's where the technology is changing. And not just that, even cryptocurrencies back in the day. And I'll talk about that cryptocurrency if it makes sense. But nonetheless, even cryptocurrencies back in the day, there was a certain amount of requirement. And it's a change in the technology, because of which it kind of got up a boom. But coming back to once you identify the technology, another is you look at if there is increased investment. Now, when we say increased investment, I am not just saying that there is increase in the capacity of factory and all those things. Yes, it is. That is one. But an increased investment could be in the context of research and development as well. Like, for example, Apple, where they used to invest a lot in R&D, they came up with the pioneering technology of smartphones. And till today, they have been the pioneers of new features. Of course, over the last 4 years, it has kind of become stagnated. But until then, they had come up with a better and better features in their products. So R&D, and not just R&D, marketing. That is also, I would consider as an investment, because think about Amazon. I mean, imagine the amount of marketing spends that Amazon is doing. And what's the advantage over here? The marketing spends done to get the mass amount of customers on your platform, that helps you get the cost of mass marketing to the revenue potential. That ratio reduces a lot, because the amount of marketing you're doing to get most of the customers, that increases the potential of generating revenue. This in turn increases the margin per customer. Are you getting the math over here?
Yes.
So when I say increased investing, I'm not just saying you are just looking at the capex. Yes, that is one, but another is the R&D and another is the marketing. These are the three things which you look at. In fact, that interestingly brings me to one of the parameters which I consider. There is something called as Mohan Ram G score. It's a growth score. If you look at the components of this particular score, it scores the company on the scale of 0 to 8. 8 being the highest. If a company has scored 8 and towards 8, that means that company is investing either in advertising, R&D, or capex. And there is a bright potential of these companies to grow. And that's exactly what even FMCG companies do these days. FMCG companies, they are trying to come up with different products which are healthy as well as tasty. I mean, think about it. Masala oats. It was just a simple masala oat, but now you have so many flavors around that. So how does it come? It happens through R&D. So when you're identifying future industries, A, you look at the technological change. B, you look at the increased investment spending. And thereafter, what you also look at that, how do these industries, they get the total addressable market? For example, as I told you about Amazon, in fact, electric vehicles have replaced ICE cars, are in the process of replacing. Consumer internet, meaning social media like Facebook, your Twitter, your Instagram, they have replaced the then existing desire of people socializing. The idea of socializing then was meeting up and then trying to catch up, etc. But now, if you feel like connecting with someone, while you are right there, you have WhatsApp, you have social media, you can immediately connect with them. That does affected on the social angle, like the physical distances are increased. But again, we are talking about investing, so let's stick to there. But these, with the arena, I would say the industries of today which are booming, cloud services, consumer internet, e-commerce, EVs, they have gone through this journey. And now, based on that, if we focus a little bit more, you would realize some of these sectors will continue to grow well, because the internet penetration, let's say in India, is just 35%. As on today in USA, the internet penetration is close to 80%. So are you realizing the amount of untapped market? which is out there,
Of course.
because as and when the
Yeah.
internet penetration increases, the requirement of e-commerce, the digital advertisements, this is one of the future industries you could invest in. Digital
Okay.
advertisement, digital advertising. So all these things will increase. So for example, let's say there is a lot of requirement of moving the workloads to the clouds, because there's so much of data, you really can't house all the servers in house. You can't
Yeah.
really have all the servers in house, and that's why you have the requirement of moving your workload to the cloud. And that's why the cloud service, which as on today is one of the industry in focus, but it will continue to be in focus. But now we have the reason of why it will continue to be in focus.
Correct.
And because of the growing complexity of internet and the cyberspace, there will be a die-hard requirement of cybersecurity. So the cybersecurity
Okay.
could be next under another industry which could be focusing on. And
Got it.
because of expanding capabilities and technology, artificial intelligence, I mean, it would be stupid if I say that artificial intelligence, if I keep artificial intelligence out of these list. So AI,
Yes.
artificial intelligence, yes, definitely that's going to be the next big thing. And as I told you, increased internet penetration will increase e-commerce as well as digital ads.
Yes.
Innovation in the physical world. When I say innovation in the physical world, in the sense we are talking about robotics. I don't know if you're aware, but after COVID,
Yeah.
when people started cleaning their house by themselves, especially in
Yeah.
India, people started realizing that you could have those vacuum cleaners and those robot type of vacuum cleaners, those like disc shape, they kind of run around in your house and they're
Yes.
able to,
Yes. Yes.
keep a map of the house, that where's your furniture,
Correct.
where's not, and they accordingly kind of clean it out. So
Yeah.
robotics, there's a starting, by the way. There's a lot to it. You have robotics in advising about investment. These are called robo advisors. They're
Oh,
already
okay.
in the thing. And not just that, innovation in, let's say, shared autonomous vehicle, more like driverless vehicle, where
Yeah.
there's a
Yeah.
vehicle which is without the driver and
Yes.
people can use that for public transportation. I'm
Okay.
not saying it is going to happen tomorrow, but these are some of the industries which I believe could be in future. Why? Because
Got it.
these industries are depicting the same thing which the industries in 2005 to 2020 depicted. Their
Got
market
it.
share was growing at a faster rate, their revenue was growing at a faster rate as compared to other industries. So they had a great amount of dynamism over there.
Yeah.
And then lastly, the global energy transition and the decarbonization requirement. So because of that, there will be a huge focus on cleaner energy,
Yes.
EV, batteries, nuclear fission, etc., etc., etc.
Got
And
it.
these are some of the industries which I believe could have a high probability of bringing impact
Yeah.
or increase in their market cap. But then there are other industries too. Something like, let's say, clean hydrogen, virtual reality and augmented reality,
Yes.
renewable energy for sure,
Definitely.
and most important, lastly, Web3, which is the decentralized finance. So these are
Okay.
some of the industries which, in my opinion, are going to be a good amount of focus, and it will only make sense. And by the way, I forgot to mention one more thing: space. How can I leave it out? Because it is because of the curiosity of mankind to explore space, and more and more countries joining it, especially India. We thanks to our government, I wouldn't name anyone, but thanks to our government, we have been successfully able to reach out to Mars in a single attempt, and that too at a
Yes.
fraction of the cost of a Hollywood budget. Or for
Yes.
that matter, reaching out to the southern pole of the moon. And
Yes.
right now, I don't know if you're aware of this particular recent achievement which ISRO had. The
Okay.
name of the project was SPADX,
Okay.
where they had inserted two modules into the space,
Okay.
and the testing was whether these modules can kind of shake hands. If you must have seen some Hollywood movies about space, you would realize there is something called as docking of two modules, and it has
Yes.
to be
Yes.
so
Yes.
precise, because if something goes wrong, the docking may not happen. And but the idea is that once, because they've been able to achieve this particular stint in terms of docking one module with another, it
Yeah.
can be so much of use in future. We could have our own international space station. It's more like a pit stop. Like if you were to go from here to, let's say, Lonavala, you would always take a fuel break or a food break.
Yeah.
It's exactly if, let's say, if you want to go from Earth to Moon, or let's say Earth to Mars, you could
Yeah.
use those ISS, International Space Station, as a pit stop, and then from there you can refuel yourself and kind of go further. And that's the whole
Definitely.
advantage of this particular achievement which is done. Unfortunately, it has not come much into the news, but yeah. So my point is, there are so many companies who are directly, indirectly supporting, ISRO and the space-related ventures. Unfortunately, I will not name them, but please
Yeah.
go and Google them, so you'll get an idea about it. So
Got
yeah,
it.
I think this is what I would say. I already named them, and I also told you how to figure it out.
Yes. So that was a plethora of information, and I am so grateful that you've shared this with us today. I'm sure if the audience has really heard you and is investing, I'm sure someone is going to make a lot of money out of this information,
Yeah,
including me and you.
I feel we could have had a podcast just talking about it.
Yeah, 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 definitely. This is a very vast concept, I feel, and there is much more deep we can go into this. So Talking about cryptocurrencies and crypto markets, Gen Z, which includes me as well, we tend to focus on short-term gains and quick money and instant gratification and that sort of stuff. So, can this attitude of making quick money or overnight success actually work in the stock market, or is it like a recipe for failure?
To be honest, it really depends upon the kind of horizon you're looking at.
Okay.
If you're looking for a short-term horizon, which I believe your question does indicate that Gen Z is focusing on that,
Yeah.
but then all the strategies will not work all the time. So you'll
Correct.
have to keep on reinventing those strategies. If you're ready
Okay.
to do that, then you could consider doing that. But
Okay.
but in that case, that really is your full-time profession then,
Okay.
and that's exactly how even traders do. So
Okay.
and people always had this requirement of instant money.
Yeah.
It's just that these days it is amplified because of the Instagram culture.
Yeah.
Because every time you swipe, you come up a video and releases a amount of dopamine, and
Okay.
then there is no end to it. So you keep on scrolling.
Yeah.
The problem is because of this, you get into the cycle of having instant gratification.
Correct.
So if you remove Instagram from your mobile, and
Yeah.
if you're able to survive for a few days, and not just Instagram but social media per se, even YouTube,
Yeah.
you probably initially you'll have withdrawal symptoms. You may not like it, but you'll probably then get used to it.
Correct.
Coming back to long-term investing, yes, you need to have a lot of patience. Like these
Okay.
industries, which I said earlier, I am not saying that. I'm not even claiming that these industries are the next big industries in the next 4 years.
Yeah.
They could take their own sweet time because there is certain amount of assumptions. The biggest assumption is the speed of internet penetration,
Yeah.
and then there could be in the while there are that this industries are kind of supposed to be the next big thing, but there could be another industry in the process itself which could
Yeah.
disrupt the existing industry. Like think about it, Blockbuster and Netflix back in the day, they had come up with this shared DVD. Blockbuster could not do it, but then Netflix adopted to this technology, and they kind of continued with that.
Correct.
So my point is, I would suggest that long-term investing is definitely very helpful. You'll have to be patient. Like for example, right now the market has kind of fallen to a good amount, to a great
Yeah.
percentage, more than 10-15%.
Yeah.
So if you have to invest today, you can't be really expecting that your screen will turn green tomorrow itself. Maybe
Correct.
over a period of time, yes, but not tomorrow itself. So from that perspective, I think we as an individual, we should keep our focus on the short term, but we should also ensure
Yeah.
our future and also have an eye towards the long term. So what the way
Okay.
I do my investment is, I take out a certain portion of my savings, put it in the
Yes.
short term investments, but then there is also a good amount of savings which I do it in the long term, and from
Okay.
based on that I kind of balance it out, and that's what
Got
I
it.
would recommend people to do so.
Got it. Done. So, sir, I'm sure the audience has already learned a lot, taking that experience and all your knowledge and listening to you. So, can we, get to know you better now? So, I know about one thing, so I'll just, ask you that. Can you tell us about your entire journey from, scoring 60% in the 10th and 12th to becoming a founder and a successful investor today?
uh, Successful investor, that's quite a heavy tag.
Yeah.
Thank you for that, but I won't consider myself successful investor. Yes,
Okay.
my investments have always helped me grow,
Yeah.
and they have grown in the right direction. But nonetheless, coming to your question,
Yes.
uh, yes, in 10th grade I scored 60, in 12th grade I scored 60. To be honest, before 10th I used to score 90 and above, and I used to top of the class.
Okay.
Teacher ka ladka ho bhai. And guess what? Something. I mean, I actually ended up in the wrong company. I won't say I had. I won't say the people with whom I had friendship, but they were bad people. It's just that they were not
Okay.
good at studies, and I had their company, and that kind of affected me. And then in 10th I scored 60, and in 12th I scored 60.
Okay.
Uh, Later in life, I also realized uh, that I used to ratify. And here's an interesting thing: what happened?
Yeah.
My senior was just kind of maybe pulling my leg or maybe trying to embarrass me, whatever. But my senior asked me a conceptual question about provision for bad debts, and he was asking me why it is happening and etc.
Okay.
It's some concept. Forget about that. And I was
Okay.
not able to answer. And by then, jaise taise, I had reached second year of CA. And I'll tell you why
Okay.
jaise taise, but I'd reached second year of CA. And he said,
Yeah.
"Kya tu already second year of CA mein hai, and you don't need this basics of accounting.
Yeah.
And B, you so here's the thing: in the first year of CA foundation, I took 2 attempts because I was not into studies.
Yeah.
That was the intention was a problem, not the ability to think.
Correct.
But nonetheless, he said that तेरे को CA में एक फर्स्ट ईयर में ज्यादा अटेम्प्ट लगे, तेरे को सेकंड ईयर में एक तो तेरा कॉन्सेप्ट भी वीक है, तो तेरे को तो 3-4 अटेम्प्ट लग जाएगा. And thank God he said that, because my ego got hurt. And maybe in this situation I can say it's good to have ego, provided you
Correct.
channelize in the right direction. Thereafter, I took up the onus, but one thing was always there with me. I was true to myself. I was always true to my core. I never lied myself. And trust me, it's
Okay.
a very difficult thing to for people to be that way. So I would
Absolutely.
first of all strongly recommend people to be that. Be true to your core. It
Okay.
will help you shape your career better. But nonetheless, I started working towards making my concept better. People would give 4 months for second year of C. I gave 8 months because honestly, I needed that.
Yeah.
And thereafter, slowly every day, I was focusing on making my concepts better. I was writing notes, and I was very regular with what I was doing. I was consistent, I was committed, and I was very disciplined. And then when I gave my exam, by the way, on the exam day, I had
Yeah.
2 degrees of fever.
Oh,
I
okay.
had to read 800 pages in 12 hours. There were 6 exams back to back. Every day, I had to take out 12 to 14 hours to read 800 pages of book for the
Okay.
exam. I was so unwell that it was around Diwali, and I'm very allergic to smoke. But
Okay.
I was so unwell that when I would climb 2 floors for the exam in the exam center, I would take 10 minutes to catch my breath. A 20-year-old, not possible,
Okay.
and without any medical condition.
Yeah.
But I was in that situation. But because I'd worked so hard towards that particular moment, and I somehow felt maybe God, but somehow I somehow felt that there was a force which was kind of supporting me yet challenging me. And this
Yeah.
is the conversation I told to that force, maybe God. It's like कि तेरे को जितना दीवार खड़ा करने कर ले, ये दिन के लिए मैंने मेहनत किया, मैं एग्जाम तो देके रहूंगा.
Okay.
And in CA exam, a person who was not into studies, a person who would fail, and in CA exams, people are not confident that they'll pass. And I was confident, and honest thing I'd say, putting a hand on my heart, I
Yeah.
was confident that I will pass, and I passed with a good margin. I wouldn't say that I got a rank, but yes, I passed with a good margin. And thereafter, I was in a different zone altogether. I started believing in myself. I was not confident. I was with full of conviction. And thereafter, I think I did CFA, FRM, and thereafter it became a little easy. But because I had already become that person. And
Correct.
then when I did CA, FRM, CFA level 2, my first job was JP Morgan. And yes, these qualifications helped me get the job.
Yeah.
But to grow in this job, or for that matter, any job, it was this learning, or the person I got groomed into, the person who was dependable, the disciplined person, the dedicated person, the committed person. And it is that and only that which helped me in my life. And most importantly, when I was learning, I used to reason, I used to ask questions, not argue, reason. You
Yeah.
argue with the object of winning. You reason with the object of finding solution, and you're receptive. So I started reasoning, and I started finding solutions. And that's what the thing is. Whether it is business or whether it is life, you will have problems and you'll have
Yeah.
to find solutions. And that's the whole thing which I realized is missing in today's education system. Or it has
Okay.
always probably been missing. It's commercialized beyond a point, and I hate it. I don't take my
Correct.
students as my customer. I take my students as my students, and there's a big difference in the attitude over here. When I take
Correct.
my students as my students, I take that as a higher responsibility. I am not just grooming them to pass the exam. I'm grooming them to be a better person also. And
Correct.
when I realized that this is the gap in the education industry, all I just have to do is be pure, give the right education. I thought that could be my USP. And thereafter, I thought, and I always wanted to have my own, setup. And that's when I
Okay.
thought that, why not give it a shot? And when I
Yeah.
gave it a shot, I got an amazing response from student. And today I'm a visiting faculty with NMIMS, SPJN, and thank God, and by the blessings of everyone, I have my own education startup, the Capstone Learnings, and where I teach CFA to my students. And when I teach them, I don't just teach them theory. I teach them practical stuff as well. How to analyze companies, how to build a portfolio, how to find out strategies. I
Yeah.
discuss all these things beyond. So the focus is beyond exam.
Correct.
So yeah, I am the when I look back, I don't think so I would want to have my journey any other way. Yes, I had
Okay.
a lot of hustle. I had a lot of. I had 12 years to. It took me 12 years to figure out that I love teaching, but I wouldn't have this journey lived any other way than the way I lived. So I'd like to thank God for that. And yeah, thank you so much.
Got it. Great, sir. Thank you for that wonderful answer. I'm sure that people will learn from this as well. You cleared, the second level in your first go, and that's pretty impressive. So, what are some, tips and tricks for CA aspirants or current CA students, who are listening to this probably? So, can you just give some tips or tricks for them as well?
Uh, okay. So then these tips and tricks actually are applicable and helpful no matter what you're doing, CA, CFA, or whatever you're doing.
Okay.
This I came across this style of learning when I was doing CA as well as CFA. What
Okay.
I used to do is I used to. It takes a lot of effort, no doubt about it,
Yeah.
but it has a short impact, a positive impact on your exam and the result.
Okay.
Think about it. Let's say in CFA, there are 10 subjects, and all these 10 subjects are tested in 5 hours, one day. That's it.
Yeah.
So imagine the amount of pressure a student could have, that they have to remember everything about those 10 subjects, bring it out, and put it into the paper in those 5 hours.
Correct.
it does require a good amount of well-planned effort, not just the effort, but a well-planned effort.
Yes.
What I used to do is I used to make summary notes
Okay.
of each and every chapter. These
Okay.
summary notes would take time. Good part is these days,
Yeah.
all these, whether it is a CA course or whether it is a CFA, all these courses, they have ready-made summary notes which are available for every chapter.
Okay.
You just need to add your own points here and there. That's it. So you don't really have to do much of the writing. I used to do, but you don't have to do it now, thanks to the technology and the way things are.
Correct.
These summary notes, once are ready and you have kind of absorbed them time and again, imagine these summary notes would roughly be around 150 to 200 page in case of CFA, I would say.
Yeah.
And something which you're reading for the third time or the second time or the fourth time, you'll be able to read it faster.
Yes.
Point is, these 200 pages you can easily cover in 2 days time. 10 pages, 1 hour, you can easily cover in 2 or let's say 3 days time. And here's the advantage of this strategy. On the day of exam, state of mind matters the most. Imagine your state of mind when you know that you have just studied 10 subjects and and you're giving the exam tomorrow. Your state of mind will be at a different level. Correct. And second of all, there could be, hopefully not, but there could be some concepts which a student might have struggled with. But then there's something called a short-term memory. If you've gone through that particular summary note, you'll be able to recall it better. And at least on the exam day, it is important that you reproduce that and kind of, give the answer. Later, you can go back home and clear the concept again. But on the exam day, these things matters. So summary notes, they're non-negotiable. What I also used to do is, I used to take 1 hour out every day and revise the older subjects. What people usually make a mistake is, they read a particular subject today and then they focus on other subjects. In the process, they forget reading about this subject because they think of reading this subject after a month. But you're human, man. You're going to forget it. Even I'd forget it.
Correct.
So what I would do is, as soon as I'm done reading a particular subject, and thankfully I have the summary notes now.
Yeah.
After 7 days of reading, I will start reading the summary notes. I will just take out that half an hour and read it. These small half an hours, 1 hours made all the difference in my preparation. It's a strategy. I mean, to be honest, largely most of us are blessed with an average mind, average intelligence, maybe more. So it is not really the intelligence. It is really the discipline and the strategy with which you approach that makes a ocean difference. Not sea difference, ocean difference.
Got it. So I'm sure the CA and CF aspirants listening to this would have definitely taken these notes down. So moving on, nowadays I have seen in my college at least as well, there are many students who want to make money through unconventional methods like trading FNO or trading cryptocurrencies for that matter, or drop shipping or e-commerce stores, etc. And so do you think that with all the choices students have today in today's day and age with technology, a traditional career like a CA or CFA is still worth it?
As I told you,
Yeah.
not just in my case, in everyone's case who have pursued CA, CFA, MBA, all these people in the process they gain good amount of knowledge and they upskill themselves.
Yes.
But what also changes is your attitude. I mean, I'm the live example in front of you. A person who would never study, who was not disciplined, who was not ambitious, was not committed, versus a person today. I believe at least my students find me bankable, and where I used to work earlier, my employers would find me dependable and disciplined. So what really brought a difference over here was when I was studying CA, CFA, FRM, or MBA.
Yeah.
All these courses, they require you to exhibit and hone into such kind of personality. And only then you are able to achieve all these things. If not today, maybe eventually, but you're able to achieve. And in the process, you become that person because it's a habit, the habit kind of stays with you forever.
Correct.
So if you are a person who already has all these things as personality traits, then maybe you don't need to do that. But to be honest, no matter the amount of discipline or dedication you have at the age of 16, 18, 20, it only grows. But it grows faster when you adopt or pursue all these courses. And that's why your elders keep on saying that, padhai karo, padhai karo. Maybe they are saying that, okay, you will get a degree and you'll get a better life. And we wrongly take it as, oh, okay, degree, better life, that means I'll earn good money and I'll be happy. No, that's not what they're trying to say. When you are going through these courses, you yourself come across challenges. You don't understand the concept, the syllabus is too wide to remember. These are some of the challenges you're facing as a student.
Correct.
And then you're trying to find out answers to that problems. And problems, my friend, will always be with you in your life. Even if you're a PhD or even if you've gone to moon and back, the problems will stay with you. But if you are in the process of able to solve all those problems or have that bent of mind, then eventually you'll solve the problem and you move on to the next one. And then next, and then next, till the time we die. But in the process, you become a better person. And maybe, just maybe, you will be ahead of the pack because the pack doesn't really think that way. So I would insist people, yes, continue what you're doing. It's okay. There's nothing wrong in doing FNO. There's nothing wrong in investing cryptocurrency. And there's nothing wrong in doing what was the thing you said?
Drop shipping and
e-commerce. Drop shipping, all these things. There's nothing wrong as far as you understand what you're doing. But keep that side of the salon. But in the parallel, why don't you get that qualification which would act as a fallback option, and forget about that. It will just help you become a better person. And you might just continue to be you might just grow into a better FNO trader, not just an average, maybe a better FNO trader, and you never know that these educations could help you. So yeah, I would strongly recommend people to pursue education, and there is a logic behind why your parents insist you to pursue it.
Wonderful. Got it. So, when I browsed through your LinkedIn, the first in your bio itself, it says ex JP Morgan, ex Axis, ex ICICI, and ex Kotak. I mean, those are great accomplishments. And, while I have you here, I would like to know what is one, major learning that you took out of this entire experience of yours, and how do you mentor your students? Because you also have your business where you mentor and teach students, right? So how do you connect these two worlds, and how do you make that so your experience as you learned while working for these companies, and now you are teaching people? So how do you come and just take all of that experience and knowledge and then mentor your students?
Okay, so when I started working with JP Morgan, I was already done with CA, FRM, CFA level 2. But then when I started working in JP Morgan, I actually, back then, there was no really explicit requirement, or even people would do financial modeling or valuation. So that's when I actually, learned the practical aspects of the valuation. And I actually started doing analysis of the company. So my real learning actually started then. What along the way, so eventually I know how to analyze corporates. I know also how to analyze financial institutions, because their balance sheet and income statement are a little different than the non-financial corporates. And I also analyzed and we had done a lot of deals with the governments outside India. So I had also analyzed the balance sheet of government, if I were to say, basically the economic angle. So luckily, I ended up learning all these things. And when I was interacting with financial institutions, I would interact with insurance companies, banks, private equity funds, hedge fund guys, because they needed the funding and we were on the funding side. So and the investment side. So I learned fairly a lot of things over there. In terms of analysis, in terms of making investment related decision, one thing which I definitely learned was, you should, if you understand the deal, only if you understand the business, only then you should go ahead and learn. This is where I got this learning. We were basically pitching a deal to Mr. Uday Kotak back in the day, and he was a managing director of Kotak Bank, the Kotak Bank, and at that level, he himself was not confident in the business, and at that level, he was ready to acknowledge that I do not understand this business right now, so let's not invest in that. So my point is, irrespective of the level at which you are, try to stay a little grounded and more, I would say, try to stay a little real over here. Try, when you are doing the work, make sure you are understanding the work in and out, like immerse yourself into it. I'm not saying you will be able to do that in all the work, but something, the project or the work which matters the most to you and the organization, try to immerse yourself there at least. That is one. Second of all, what I've also learned over a period of time was, initially when I was new and I was raw, if I had to discuss a deal with my senior, or if I have to make a presentation with the client, I would just do a basic level of preparation, talk about the deal, talk about everything to the client, and I would do the preparation and go and meet them. What would happen at that point in time was, when they would ask me, they are not really drilling me, but they would ask me more questions about that deal, about that research, and I would not have all the answers. That's where I learned that when I'm doing this, and when that deal or when the discussion matters a lot to me and my career, I would go 2 to 3 or even 4 levels down deep. I would do a lot of research about that deal, and I would anticipate if he asked me this question, this is the answer I would give. If she asked me that question, this is the answer I'll get. And when I was able to do this, not in a negative way, but I knew in which direction the conversation is going, and I was able to, I was confident about handling that conversation.
Got it.
Overall, across all these things, what came out largely to me was, do a lot of research, do your homework very well, because that is the base of your conviction. And are you even listening to me? I'm saying conviction, not confidence. Conviction is way stronger than someone being confident. A person speaking with conviction can move mindsets. A person speaking with confidence will come out as impressive, but may not really move the mindset of the opposite person. But when you speak with conviction, the opposite person starts believing in you. And I'm not saying do it for the wrong reasons, do it for all the right reasons. But when you're doing something, which is worthy, why not have a conviction for it?
Correct.
Then over there itself, your game become. I mean, you win the battle. Something like that. That was broadly one thing I learned. Another thing was just a moment. There's actually a lot of things I've learned. I'm just trying to bring out the best and share it with the people.
Of course.
And when you do this now, the byproduct is you actually become good at work.
Okay.
And when you become good at work, now you become like a magnet.
Okay.
and people start trusting you.
Yeah.
You might feel that they are giving you a lot of work, but please see the other side of the coin, and which is more worthy, that they are trusting you more, that this person will do the job.
Okay.
Yes, there will be occasions where people are taking undue advantage of you, and you might feel bad at that point in time. But trust me, in that moment too, you are learning, not them, and you
Correct.
are growing at some level somewhere. So I believe that just be patient when you're working, be it your job or be it your own business.
Yeah.
Something is happening at somewhere. It's just that right now you're not able to see. It's like climbing a mountain. Like, when you're driving on that ghats, the circular winds,
Yeah.
you feel that you're not going anywhere, but suddenly, just because you're paddling, pushing the pedal continuously, the car is moving, and suddenly you realize, oh my god, I'm on the top of the mountain. Just
Yeah.
focus on the process. Just don't, I mean, yeah, this is the biggest learning I've got, that just focus on the process. In fact, it is because of my 10 to 12 years of learning, it is because of that I'm able to teach better.
Correct.
One is you need to be a good orator, but one is you also need to bring perspectives over here. And because I've worked into different what do you say, domains, that
Yeah.
has helped me get a broader perspective. So focus
Okay.
on the process, not the outcome. The outcome should always be the byproduct, not the end. So yeah,
Got it.
that's what I would say. And when I have done this, when I'm teaching my students,
Yeah.
let's say I'm teaching financial statement analysis, I actually take up listed companies and I help them. I don't tell them that this is what the company looks like. I teach them how to analyze. The way I right now spoke about how to identify industries is the same way I
Correct.
teach them. And not just that, I also give them some practical business situations. Like, let's say, for example, you have in next 4 hours, you have been called for an interview for ESG investing, and you have
Yeah.
no idea about it. And the person who's going to interview is quite a technical guy over there. How do
Okay.
you move around? You just have 4 hours. You need to think smart. I'm not asking you to cheat away, but you need to think smart.
Yeah.
One approach is you can go to the internet and read as many things as you can, but it's not possible to do that in 4 hours. What you can do is
Yeah.
get a basics of that ESG investing, for example, and then go onto that person's maybe LinkedIn page and
Yeah.
try to read what that person has written. Try to understand it and then reproduce the same matter in the interview to that person. Because here's how in cricket they say, don't play the ball, play the man. Over here, again, please don't take me wrongly,
Yeah.
but over here, the interviewer would be mighty impressed if you speak about similar points which he or she are kind of, believing in. And later, be honest about this also.
Yeah.
Later, when you go back home, do a thorough research about ESG, because then when you get that job offer or that offer letter or that deal from the client, you should be worthy of it in true sense. I am just
Okay.
talking about these things. So these are some of the learnings I give to my student on how to manage some of the sudden situations. Like there was this deal of I won't be able to tell the name, but
Okay.
there was a steel company which was acquiring another steel company, and we had to give a response on that deal within 5 hours, and that came to me at 7 p.m.
Okay.
And I was junior at that point in time, so I did not have all the authority. What I did
Got
in
it.
those 5 hours, I did as much research as I could. I wrote a brief short note and I showed it to my senior. I
Yeah.
followed up with my senior and I got the approval on time. At that point in time, I did not have 5 hours. I just had 5 hours. 5 hours. I did not have time to get into the steel industry in detail. What is the
Correct.
economy if in future? I did not have that time.
Yeah.
But later, when I got the deal, or in the process, I started doing research already. So I'm asking you to juggle between these two situations. You'll have to shift gears over here, and that's
Okay.
exactly what then I try to do it to my student. And yes, I also teach them through a lot of games. Also,
Okay.
I try to bring in that. But yeah, this is what I try to do, and this is how I kind of bridge practicality and a lot of career advice to my students.
Correct. Got it. I mean, I am sure that you are a good educator, because even in this podcast, you've given such brilliant examples. I mean, they were truly, truly great. So, yes, unfortunately, we are coming to the end of this podcast. And the last question from my side to you would be, one advice you would like to give to the audience regarding business, the stock market, or life in general.
Uh, that's quite a broad question.
Yeah.
I would focus on the larger piece, the life,
Okay.
and answer this question. In fact, given the context of our discussion and given the interest with which the audience could be looking at it, I am sensing that audience could be concerned or interested more about the career building they have. So
Okay.
here's my advice on those lines. Uh, Very few people are lucky like Virat Kohli, who
Yeah.
at the age of 16 they know what to do,
Correct.
but most of us we don't know what to do. I, for example, I was also like, I mean, if you think that I have worked, it was always my plan to work for 12 years and then teach and then kind of, bring practicality. No, it would be wrong if I put it that way. But what was I doing was I was always true to my core. I always knew that whatever work I was doing, I was enjoying, but I was not satisfied to the level I wanted to be. So I was true to my core. And because of that, I ended up getting into different profiles. I was an analyst. I was the relationship manager. I was on the front end. I was into investment banking, sell side. I was also on the buy side. And then again, I went back to the sell side. And parallelly I was teaching. I was doing a lot of hustles or side hustles, whatever you call it. But my point is, because I was always true to my core, that this is, I enjoy the most, I'm okay about it. In fact, here's an example. In fact, earlier I was an analyst, more like a research related, a desk job. My nature is extrovert. So, but luckily, or whatever I pursued, I went on to the front side, interacting with the clients. As an analyst, I was doing fine, but as a front end guy, I was doing amazingly well because I was good at interacting with people. My point is, in the process, you find your passion. When you're in that exploring phase, in the process, when you're finding that passion, in that process, try to take up a job or a role which is closer to your personality, not related entirely to your degree. As I told you, degree will help you, but what will help you is your bent of mind and personality. When you're in the role which is closely resembles to your personality, you will not have to act up. You will be yourself on most of the days, and you'll be happy with it.
Got it.
And while you're doing this exploring or the hustle, hopefully someday, just like the way I realized that I love teaching, maybe you will realize your passion. And when you realize your passion, trust me, you will not work a day. Today, I'm working 7 days a week, 15 days a week. I don't think of holidays. 10 years ago, somebody would be asking me, would you work on Saturday, Sunday? I'll be like, no, sorry, boss, I will not work on weekends. But today, I don't really care because I really enjoy being with my students. My point is, try to find passion. It does make a sea difference, but it takes time. You could be lucky, you could find passion tomorrow. You could be unlucky, you could find passion after 20 years. But don't let that go. Keep on hustling, keep on exploring. That is the only way you could find passion. And once you find it, give your every bit and go after it, no matter how the road ends.
Got it.
So yeah, this is what I would say. And with that, I would tell all the best to you and everyone else.
Thank you so much, sir. It has been an absolute pleasure to have you on as a guest, and surely many of us have been enlightened with so much information. Thank you for sharing almost everything that you've learned throughout your life's journey and summing it up into this 1 hour 30-minute thing. It's difficult, but thank you so much for doing that, and I just thank you so much.
Thank you very much. The feeling is mutual. I equally enjoyed being on the podcast. All the best to you, Arnav, for all the future podcasts.
Thank you so much.